Again, amazing traders, and welcome back. Today we are going to be doing a market review for Wednesday, Thursday and Friday for this current trading week. I already did a market review for Monday and Tuesday. In case you did not watch that, I am going to put the link of the video in the description of this video, so you may want to go and check that out. And equally, I am going to put the link to the video of the Asian range or the ICT power of 3, so that for those of you who are just joining or who are actually new, you may actually go back and watch, so that you will know what you have been doing exactly. So to make this video short, I am going to jump straight into the strategy. So we are going to be using the Asian range to take trades, okay, or the ICT power of 3, which is actually the accumulation, the manipulation and the distribution. So what we have actually been doing is when we step in the market on a trading day, we want to pay attention to the Asian session, which starts actually at 8 p.m. New York time. So we are going to put our vertical line there, and we are also going to put our vertical line at the midnight opening price, which is 12 midnight New York time, like we have been doing. Please make sure that you go back and watch the old videos so that you will understand what I am doing here exactly. So let's look at midnight New York time, and we are going to put our vertical line there like so. So the next thing we want to do is we want to mark the high and the low of the Asian range or the Asian session, and this is what we have here. That is from 12 p.m. from 8 p.m. to midnight New York time. So we have something like this, okay. So the next thing we are going to do is we are going to pay attention to the midnight opening price, which is actually what I am going to do here, okay. Just put a horizontal line across so that you study how price is going to react there. Now, what is the condition? The condition is if we are bearish, we want to see a run on the Asian high or buy side liquidity, and then we are going to wait for a market structure shift and we will sell. And our lowest profit objective is just one standard deviation, and we always say that one standard deviation is simply a replica of what the Asian range projected downward or upward. Now let us look at what happens. Now when the market opened, we saw a run on what the Asian highs buy side liquidity, which is actually where the manipulation occurred here, right? So we are going to be looking for what your setups to form over here so that you can look for sell entries. And why did price even go over here? If you study here, you are going to notice that there's a fair value gap to the left of your screen here. That's why we saw price trade into that, to make sure that this price action here is balanced. And then what happened? We saw a market structure shift which actually occurred here. It did occur here actually, and then price shifted back into this balanced price range, and you could take your sell here, or you could still take your sell even right here, okay. There were multiple entries here, multiple entries opportunities. You could take your sell here, and if you did that correctly, you will have had your one standard deviation in less than no time. So let's do it right here. Let's say you took an entry here, and your stop loss was even right over here is still okay, right above the previous high, which is 20 pips stop loss, depending on your risk appetite. Now if you're just targeting one standard deviation, we are going to use our flip tool to do that. We are going to extend this downward. You will realize that your profit was actually made very easily, and that would have been a very good winning trade for Wednesday. In case you don't know how these settings are done, again, there's a video on that. I'm going to put the link also in the description so that you can follow along. All right, this is 1 and 2, and I am going to do 3 standard deviations here. Just give me 1 minute. 3 standard deviations like so, and let me reverse it so that we can look at what happens as price continue to move downward. So let me reverse this, okay. Now the background is too much. I'm going to remove the background color so that we don't have this. Okay, perfect. So look at what happens. You see, this was your profit objective here, which is just one standard deviation right here. So if you took this trade successfully and you targeted one standard deviation lower, which was at 1.25948, that would have been a very good trade for Wednesday, and you will be done. And that was about 26 pips stop loss. And if you are also curious, like how far did the market go up, you may want to check also, did the market go against you by 1 or 2 standard deviations? You can check also. You see the market traded here at 1 standard deviation above, and then made how many standard deviation lower? You can see that, okay? You see, or I'm sure it made about 3.5 or even 4 standard deviations lower. Let's check that. Let's do 3.5 and 4. You see, this is it right here. This is 3.5 standard deviations. That is how far the market went lower. So if you took that trade, I mean, it would have been a very good trade for Wednesday. I'm going to take away 4. And you see, negative 3.5 standard deviation was actually at 1.25648, which was a very good trade as well. In case you have a very high risk appetite, you will have also waited for price to go right down here. But our lowest profit objective is just 1 standard deviation, which is right over here. You take your profit and then you leave the market. I hope this is understood. Okay, let us look at what happens the next trading day, which was on a Thursday. We are basically going to do the same thing. And remember that sometimes it's very difficult to do. It's not as easy as you see me do it here. Sometimes it's actually very difficult to see these things form, okay? Very difficult, trust me. You may have to have studied for a very long time before you can be able to do what I'm doing here. And just to mention, always pay attention to the midnight opening price, because it always acts as a classic support and resistance if I speak retail. Now we are going to do the same thing here again. We are going to pay attention to 8 p.m. from 8 p.m. to midnight New York time, and we are going to look at the range, what happened there, and we are going to pay attention to the midnight opening price and how price treated that level. So let me just do this. Actually, it should be like so. Like so. And we are going to pay attention to the high that was formed during this session and the low that was formed during this session. Okay, this is going to give us our Asian range, and we are going to look at the midnight opening or the true IPTA opening price. Okay, and we are going to study that. Always pay attention to the opening price, like so. I think I've said this over and over again. You are going to see how many times the market is going to react around the opening price. Okay, now you are not always going to have a trade. Okay, if you look at what is happening here, you see that we didn't actually have a trade, because what is our goal? Our goal is, if we are bullish, we want to see price trade below Asia, right, and then take liquidity, and then we are going to look for buy opportunities. But price did not go there because the market was actually very bullish. The market was bullish on Thursday. You see, we do not come down here. So let us assume that on Thursday we did not have a good trade. Okay, we didn't have a good trade, but that would have been okay. But remember that I've also told you that you can still buy at the midnight opening. Okay, which means there's a possibility that if you are following along, you could still pay attention to this level here. Look at how price reacted to the midnight opening price here. How many times it stayed there? 1, 2, 3. Okay, so you could still take your trade here, right? Or you could have waited for a market structure shift. A market structure shift occurred here, all right, and then when it occurred here, you wait for price to come back to any institutional reference point that is found around here. And if you can study very well, this is a bullish fair value gap, which is actually a BC, a buy side imbalance and a sell side inefficiency. Now look at how many times price reacted to this BC. Look at how many times. So if you have been following along as well, you could still take a trade from here. And that will still be a very good trade, right? It will still be a very good trade. But let us say you did not see the strategy. Okay, let's say you did not see a trade and you did not take any trade on Thursday. There's no problem. Let us look at Friday and see what happens. Okay, this is Friday. What we are going to do again is very simple. We take our vertical line, we look at 8 p.m. and we put the vertical line there, and then we take the next vertical line and we look at what midnight, which is 00, right? You put there, and then you are going to mark the high that was formed during that session, which is actually going to give you the range, and you are going to look at what the low that was formed during that session, which is actually going to give you the entire range. Now the next thing you are going to do is you are going to pay attention to what the midnight opening price, and you are going to extend that across like so, right? You are going to extend that across like so. Just give me 1 minute. Maybe I should change this one, no problem. Like so. I'm going to use the price note so that we can know the exact price. This was a midnight opening price, like so. We can extend it to 3 p.m. okay, to 3 p.m. for that day. All right, now what is the condition again? If we are bearish, we want to see a run on Asian highs, buy side liquidity, boom, and you saw that happened right over here, right? This is where the manipulation occurs, right over here. Just excuse me, I'll have to change that again. The manipulation occurs right over here, and you are going to wait for what? The market structure shift. Now, where did the market structure shift occur? The market structure shift occurred when price traded below these lows, right? We saw this energetic displacement, and then price created what? A fair value gap here and a small bullish order block here, which is actually a 5-minute bullish order block, since we are currently looking at the 5-minute time frame. Now, when price returns into that premium level, you are going to look for what? Sell opportunities right here. This is your trigger right here, right? You're going to look for sell opportunities, and again, what are you going to do? You're going to target just one standard deviation lower, only one standard deviation, which means you are taking a replica of the Asian range and you are projecting it downward, right? When you do that, it's going to give you one standard deviation, and if you study correctly, one standard deviation was hit at what? 1.26 or 300, right? Which is actually a round number, and that was a beautiful trade right here for Friday. You see, look at how the market hit one standard deviation and stayed there and closed for the day. So this is actually 35 pips, right? Which is actually a very, very good trade. Now, you might have gone through hits or seeing price do this and then coming back into your entry. That's totally okay, but you see, that has to do with trade management. Now, for you to know when to exit and take partials and bring your stop loss into your profit zone and stuff like that, that is trade management. So you see how we hit one standard deviation beautifully, and then the market starts chopping here and we close for the week, right? So this strategy is actually a very, very good strategy. I've said this over and over again. If you are looking for just one strategy online where you can never get to worry about learning any other thing, this is one of those strategies I really encourage that you should learn, okay? It's going to help you a lot. You are going to take time to understand it, but trust me, if you get a good mastery of this, you are going to see a lot of success. The point is, you are not going to see trades all the times, but trust me, in a week there is a high possibility that you are going to see a trade. I guarantee you. I hope that you found value in this, and as usual, please, I plead with you that you should do well to like this video, do well to leave your comments so that I know if you are following along, or if you have any other suggestions you can bring along so that we can I can do other videos for you to follow along. Now, I just want to mention again that pay attention to the midnight opening price. See how the market stayed there, right? You see how the market stayed there. See how the market respected this level. You see, so if you didn't even sell over here, you could still sell at what? The midnight opening price. When price returns there, when the market returns there, you will still look for your sell entry right here, and this would have still been a very good trade, and you target just one standard deviation lower, you will have still made very good profit in the market. That's 29.5 pips actually. So I hope that you have learned something. Hopefully, and Lord willing, we are going to meet next week again, and thank you for hanging around. Thank you so very much, and goodbye.